Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
What a great topic today on the College Investor Audio Show. Well, no, it's always a great topic, but today it's the Dividend Aristocrats. I don't know why I think I need some sort of a British accent, although it's very bad, and I apologize for it. But it's the Dividend Aristocrats today. Love this. So let's get right to it. So anyway, the Dividend Aristocrats are a group of S&P 500 companies that have increased their dividends consecutively for the last 25 years. The Dividend Aristocrats Index was created and is maintained by the S&P Dow Jones Indexes, which uses a specific methodology for determining which companies fit into this index. It is rebalanced each January. New companies may enter the index and others that no longer qualify are just dropped out. So, in order to qualify, here's what they need to do. 4 criteria. Be a member of the S&P 500, obviously. Also have increased your total dividend per share amount every year for at least 25 consecutive years. Have a minimum float adjusted market capitalization, or FMC, of at least $5 billion as of the rebalancing reference date. Have an average daily value traded, ADVT, of at least $5 million for the 3 months prior to the rebalancing reference date. So, dividends must be cash payments rather than issued in stock or as special dividends. Currently, the minimum number of stocks in the index is 40. In some cases, there may not be enough that meet the annual criteria to be included in the index. When that happens, stocks that have paid dividends for 20 consecutive years are also considered. So what companies are included in this thing? So as of December 2019, there are 57 companies included in the index. This is from Fool.com. They are, I'm not going to name all 57. Don't worry. Here's just a couple of them. AT&T is in this. Cardinal Health, Caterpillar, Chevron, Coke, also part of it. ExxonMobil, of course. We hear about them a lot. Lowe's, McDonald's is in here. Pepsi, Procter & Gamble, huge companies. T. Rowe Price is in here. Target is also part of it. Walmart, yeah. Kind of could have guessed that one. Cisco is here too. Here are the top 10 in the index, and this is by index weight. Just going to name a couple of them. Clorox is in the top 10. Chubb Limited is in the top 10. Illinois Tool Works and Walmart also in the top 10. Now, after I've kind of just given you a bunch of different companies, sorry about that, but I wanted you to get an idea of kind of the big hitters in this thing. So here's how to invest in the Dividend Aristocrats. One of the simplest ways to do this is through the index, which has the ticker symbol. It's big. It's not catchy. SPDAUDP. SPDAUDP. The index is made up of 11 sectors. In addition to the S&P-based Dividend Aristocrats Index, you can also invest in the S&P TSX, which is the Canadian Dividend Aristocrats, the S&P UK, which is, Great Britain. That's called the GBP, and then the S&P JPX Dividend Aristocrats. Also, S&P Euro High Yield Dividend Aristocrats, or EUR for Europe. The above indexes are owned by the same company, the S&P Dow Jones Indexes. You can invest in individual stocks that are in the index as well, but just because a stock is in the Dividend Aristocrats Index doesn't mean you shouldn't do your due diligence on the company before investing in it. Always do that. And while the stock will pay a nice, consistent dividend, you probably don't want to hold a stock that slowly goes down. That scenario is called capital depreciation and may ultimately result in a loss, even after dividends, once you decide to sell the stock. Fundamental and technical analysis both help in deciding which ones are a good choice to invest in. If you've narrowed down your choice to only those in the Dividend Aristocrats Index, you have less work to do when researching potential candidates. Good companies are generally those that have positive income, growing revenues and earnings, and good management. So important. But your research shouldn't stop there. If researching a stock seems intimidating, going with the SPDAUDP index will ensure diversification across all of the Dividend Aristocrats stocks. Just makes your life a little bit easier. Hey, that's all we have for today. I hope that was really helpful in understanding this Dividend Aristocrats thing. It's really cool. Can be a great way to diversify your portfolio. If you have any questions, you want to see the specific methodology for determining these companies, you can see links and resources. Oh my goodness, tons of stuff at thecollegeinvestor.com. Man, thanks so much for being a part of this, and we'll talk to you again soon.